A threat to growth of Kenya's financial services sector. The country lost close to $150 million to online fraudsters in 2014 alone, while several financial institutions sent packing over 90 staffers on fraud crackdown. Adam Nyaga is the East African Vice President of SOFGEN, SOFGEN Group, and now joins me now to discuss how to curb fraud in the Kenyan financial services sector. Good afternoon, Adam.
Good afternoon.
This particular conversation is very important now, looking at the headlines with all the situation we're having in our banks and receivership, and it may boil down to all those things, but at the end of the day, it's about dishonesty. How big a problem is this?
It's pretty significant, and it's not unique to Kenya or the East African market.
Right.
If we look globally, last year it's estimated we lost about $70 billion in fraud from the banking sector. That's about 3 times the budget of Kenya. It's a tremendous problem.
Right.
And I guess it boils down to the inherent nature of humans and the capitalistic way of life, where everybody wants to get ahead of the next person.
Okay, regardless.
Exactly. Okay.
Yeah. This seems to be a very interesting trend here, is that there's increasing fraud that is IT-based. There could be insider jobs and whatnot, but a lot of this is driven by ICT. We just got smart doing the wrong thing.
You could say so.
Right.
If we look, because, a lot of people have spent time studying fraud, and what's the genesis of it and how can we tame it.
Right.
And as we say, it's a bit of human nature. So there is something we call the triangle of fraud, which is essentially around motivation.
Right.
Before people commit a fraud, they must have some motivation. They must be able to justify their action, both to themselves and to the society at large.
How do they justify to themselves?
See, for example, I'll give you a real example.
Right.
So what happens is, if I have certain economic pressures around myself, I have a mortgage I'm unable to pay, or my neighbors bought a new car and my old jalopy is letting me down, I start to feel some pressure on myself to come to some money and move myself up. And then I'm able to justify to myself that, look, other guys are getting ahead, why not me? And then I'm able to look around the environment and see, how can I get away with this? Because justification is not just why I should do it. I need to be able to see that I can get away with it.
Right.
Then I can de-risk it for myself.
Right.
If I steal, I will not get caught, and so I can pay my house off and look good in front of everybody, but without getting arrested.
Adam, sorry to jump in, but there's, especially the banking sector, you'd assume that they've done a lot to curb this because they deal with money. What is this that is predisposing banks to fraud?
See, again, humans are at every level of the bank, from the MD to the lowest person. And the case, for example, of Imperial Bank, which is very recent in this market, you find that the MD was himself in the center of it. It's not that he lacks. He's a guy of means, but of course he still wants
justified to himself.
Exactly, and what they're doing is to take depositors' funds out of the bank through fraudulent loans to themselves and passing money onto their own companies and this kind of thing. So the third part of the triangle of fraud is what we call opportunity and capacity, which is where the staffers come in, and that is where a lot of fraud is internal to the bank. What happens is that once I've done with the justifications and the motivations, then I come in and I try to find where I can get the money out of the system. And so if I find opportunity, I'll give you one of the typical examples of what happens in this market. I will look around, I will find what we call a dormant account, for example. This is somebody, an old person, a retiree, exactly. This guy opened an account, left some money in there, hasn't operated the account for more than a year. And I would say, good. Second thing, you find that in a lot of banks, people with the knowledge know where to find money in the systems. And what they will typically do is they may take money out of some hidden corner of the system. For example, things we call suspense accounts, which is where people put funds they cannot quite account for today, and whatever the case in future, they're going to account for it and put it in the right account. And so people will take some money out of a suspense account, put it in a customer's account, call one of their friends from outside the bank to come and withdraw that money. And at the end of the day, then the account balance is the same as it was in the morning, but a huge transaction has gone through that account. Now, since it's a dormant account, the owner of this account will never realize. Because, a year down the line, he's not going to come and check what happened in January in my account, so long as his balance is okay.
Adam, do we have, sorry to jump in, but do you have IT solutions to this? Granted that humans are evil by nature, do we have IT solutions that can give some degree of security to our financial institutions?
Certainly. So one of the fortes of SOFGEN, the company that I work for, is in this area of, we call it operational risk management. because within the bank's operations, then there's lots of risky areas where money can get lost. So we do have a fraud management solution that specifically looks around user behavior. Like we said, between that triangle of motivation, justification, and opportunity, there is certain behavior that comes around. You find people querying lots of accounts to see where they can hide some money. You find people, doing in the back end of the bank some operations to load balances in some accounts. You find that, an account that doesn't do so much of hefty transactions suddenly spiking. And so we have solutions that are able to catch all these kinds of things happening and draw a pattern around it and be able to warn you in advance that a fraud is likely to happen around this account. Sometimes it's too late. The fraud already happened. The systems allow you to do investigation. So you're able to dig into a transaction and everything around it and see who was involved and what they were doing. And the third part, which is quite critical, last year alone, Kenya lost about 2 billion Kenya shillings in banking sector fraud, out of which only about 500 million is recovered. 1.5 billion is still lost. Not because the banks didn't find the losses, but because even the system of prosecution and eventually getting somebody guilty is difficult to navigate.
No one can do that.
Exactly. It's not easy because, for example, the evidence that you have to produce in court to prove that somebody stole money, there is a high threshold. So our system is able to also help you, dig out the kind of evidence that can incriminate somebody that is guilty.
Interesting. I have to stop there because I'll have to check my accounts today. But many thanks. Adam Nyaga is a VP for East Africa at SOFGEN.